this is not just a technology. It's a new asset class, right? And beyond that, it's a global monetary system. You know, it is the first global private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. It's a big idea.
Don't forget to subscribe, crypto traders. Let's continue with the interview and the analysis of this one.
We did something called Bitcoin Brainstorm. We do a Bitcoin brainstorm monthly, and one of them was the convergence between Bitcoin and AI. And we had, you'll probably know of his developer name, Roastbeef, from the Lightning Network on, and he was talking about how in Africa already this convergence is redefining division of labor. I mean, the gig economy we understand here in the United States, put that on steroids in terms of micro gig economy in the emerging markets, and you have a whole new kind of economy. So yes, very exciting. When I was at Abundance, the forecast was, our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it as fiduciaries. When you use those code words, new asset class, what it means, the correlation of these returns are very low compared to those of other assets.
Especially as bonds and stocks are becoming more correlated, you need something uncorrelated.
Yes, absolutely, absolutely. And so they have to consider it. Now, what are we saying? There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. Well, okay, there's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric. And it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, and it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class.
Bitcoin remains a compelling subject of speculation and investment. Recent forecasts have projected a bullish scenario, suggesting that Bitcoin's price could surge to an eye-popping $1.5 million by the year 2027. Such predictions, while speculative, underline the profound shifts occurring in the financial landscape. Central to Bitcoin's meteoric rise is the growing interest from institutional investors. Traditionally, institutional involvement in cryptocurrency was limited, marked by skepticism and caution. However, the tide has turned. Institutions are increasingly recognizing Bitcoin as a distinct asset class, one with unique characteristics that set it apart from conventional investments like bonds and stocks. What makes Bitcoin particularly attractive to institutional investors is its low correlation to traditional assets. Unlike stocks and bonds, which often move in tandem with broader economic trends, Bitcoin's price movements operate independently, making it an intriguing diversification tool for institutional portfolios. The allure of Bitcoin lies not just in its potential for astronomical gains, but also in its resilience during economic downturns. In times of market volatility or inflationary pressures, Bitcoin has demonstrated a remarkable ability to preserve value, making it a coveted hedge against economic uncertainties. Moreover, the institutional embrace of Bitcoin signals a broader shift in the perception of cryptocurrencies. Once dismissed as a fringe phenomenon, Bitcoin is now firmly entrenched in mainstream discourse, with institutional heavyweights allocating significant resources to understand and harness its potential.
Yes, and first let me tell you a little story about Bill. In 2017, when Bitcoin was below $1,000, and there was a war going on between the Bitcoin maximalists and, those focused on the Ethereum network. Chris Berniski, you may know him. He was our first crypto analyst and went off to start Placeholder. He decided, you know what? We should have a meetup at our office between the Bitcoin and Ethereum supporters, and we'll provide
religion.
We'll provide rules of the road. And Bill was the grown-up in the room, set the tone from the Ethereum side, and we had such a productive talk that I went out and bought Ether right away. I already owned a lot of Bitcoin because it was so convincing that there's a place for both. And
Bill is a brilliant adult in this space, yes.
The emergence of ETFs marks a significant milestone in the crypto space, catalyzing profound shifts in market dynamics and investor behavior. These ETFs represent a groundbreaking financial instrument that allows investors to gain exposure to Bitcoin without directly owning the underlying asset. With the introduction of Bitcoin ETFs, the cryptocurrency market witnessed an unprecedented influx of capital, with billions of dollars pouring in within a matter of weeks. This surge in investment underscores the immense appetite for digital assets among traditional investors and institutional players alike. One of the key implications of Bitcoin ETFs is the democratization of cryptocurrency investment. By offering a regulated and accessible avenue for investing in Bitcoin, ETFs have opened up the market to a broader spectrum of investors who may have been hesitant to navigate the complexities of purchasing and storing digital assets independently. The introduction of Bitcoin ETFs has fueled a surge in demand for cryptos, driving up prices and amplifying market volatility. As more investors flock to these indirect investment vehicles, the scarcity of Bitcoin coupled with heightened demand exerts upward pressure on its valuation, leading to price appreciation and speculative fervor. However, while Bitcoin ETFs offer unparalleled convenience and liquidity, they also introduce new layers of risk and complexity to the market. Unlike direct ownership of Bitcoin, ETFs are subject to regulatory oversight, counterparty risk, and management fees, which can impact overall returns and introduce additional layers of uncertainty for investors.
For sure.
Yes. And so yes, we're very excited about the Ethereum network and Solana. And so they all play different roles. And what I love is there's kind of a little competition. I think competition is always good to keep the other networks honest. And so, yes, we think that decentralized finance, and we do call it now the Internet Financial System, which is really a
I like that.
Yes.
In the ever-evolving landscape of blockchain and decentralized finance, discussions surrounding Ethereum, Solana, and the broader ecosystem are both vibrant and crucial. These platforms represent pivotal pillars in the decentralized realm, each with its unique attributes and contributions. At the heart of these discussions lies an undeniable enthusiasm for the Ethereum network and Solana. Ethereum, often hailed as the pioneer of smart contract platforms, has established itself as a cornerstone of DeFi innovation. Its robust ecosystem, expansive developer community, and proven track record make it a formidable force in the blockchain space. Solana, on the other hand, has surged onto the scene with lightning-fast transaction speeds and low fees, positioning itself as a promising challenger to Ethereum's dominance. Central to the discourse is the recognition of the distinct roles played by these networks. Ethereum's solidity in facilitating a wide array of decentralized applications and smart contracts underscores its versatility and reliability. Meanwhile, Solana's performance-driven architecture enables high throughput and scalability, catering to the demands of a rapidly expanding DeFi landscape. Amidst the enthusiasm for Ethereum and Solana, it's essential to acknowledge the symbiotic relationship among different networks. Rather than viewing competition as a zero-sum game, it is seen as beneficial for fostering innovation and maintaining integrity within the ecosystem. Competition incentivizes networks to continually enhance their offerings, driving technological advancements and pushing the boundaries of what's possible in decentralized finance.